Morning, Steve Frady in Chicago with the morning grain comment. Well, we've got nice weather and it's good for harvest across the U.S. for the next 6 to 10 days. But we've seen a nice rally in beans and meal in the last 3 days, and it's unexpected during the harvest. And what we are learning is that there aren't enough beans moving into the pipeline to satisfy the crush demand, whether it's domestic or export. It's mostly in the east. There's some logistics problems with the railroads there, but more importantly, they just need the meal now. And so in the last couple of days, we've seen some panic buying, and we're back close to $10 beans, and nobody thought that. And that's another part of the story, is that everybody's bearish. Everybody was short going into the harvest. We haven't seen any numbers yield-wise to suggest that they're wrong, but the market's rallying. And right now, the concern is that since 50% of the bean harvest is over, the farmer may not sell enough to satisfy that demand. And so technically, this rally could continue despite the fact that the bean numbers are bearish. Over in the corn, you're getting the same kind of feeling. We're trading over some prices that we didn't think we would trade over with a record corn harvest and the talk about the crop getting bigger. The farmers allowing the corn to dry in the fields, so we're not getting a lot into the pipeline. And now the same fear is hitting the end users that once 50% of the corn is harvested, the farmer won't sell anymore and he'll try to store it. And so corn could also stage a similar rally like beans, trying to get corn into the pipeline, even though the numbers are bearish. Wheat's kind of a follower. For the most part, we think that the wheat's traded all the 2014 bearish news, and now it's looking ahead to the unknown of 2015. And so it's more of a trading range rather than just I'm flat out bearish. Outside markets are still mixed. There's a lot of concern about European banks, maybe as much as 15 of them, not passing the test of liquidity and maybe having to go under, which puts more pressure on the European markets, helps the US dollar. China data, kind of mixed bag there. It looks like they're trying to get better, but some of their data suggests this could be a slow, drawn-out process. So all in all, a surprising rally in the grains led by beans and meal, and it may not be over if the farmer doesn't move enough beans to the pipeline to satisfy this record front-loaded demand for beans and meal. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.